let's get into some questions. So I'm going to address these questions to the team. And the first question is around the recent social unrest we've seen and whether that social unrest has impacted your view on the long-term outlook on South Africa.
Nolan, do you want me to take this one?
Yeah, go for it, Casey.
Yeah, and I was anticipating a question of this day just sort of coming through. So I wouldn't say per se it has necessarily changed our outlook sort of going forward. The recent unrest has really just served to highlight the undercurrents that sit within our economy. I think a lot of us can sometimes be numb to the facts for the day-to-day realities of a lot of sort of average South Africans. And this recent arrest just goes to show sort of the importance of government addressing those structural challenges that we've alluded to throughout this entire presentation. So if anything, it's really just served to perhaps wake up or really open government's eyes that if they do not do something sooner, make a wide range of reforms and long-term issues, not just addressing the short-term sort of gains, the situation will start getting messier. So essentially just really served to highlight the underlying currents that actually exist in the South African economy. Nolan, if you want to add on more to that.
I agree with everything you said. The first time I was involved in unrest was actually I was in London for the 2011 riots. Honestly, those were more scary to me. I think those were more vicious. I think there was a definite stronger attitude of actually doing physical harm to people, whereas this was by and large sort of wanton destruction of property, but it didn't transgress into sort of as much violence, against humans. So maybe the point I'm making is that unrest does happen everywhere. It's interesting. Australia has actually had to bring in laws a couple of years ago that says if you are rioting, your sentences are far higher from the courts if you were rioting with a mask to try and avoid detection. So they've actually got no rioting with mask rules, which didn't work well in COVID. But this is a phenomenon that you're going to see from time to time. And South Africa had a very scary, a very significant, a very traumatic event take place. How do we see it? Actually, it kind of worked out more positively than I thought. So you had a lot of disadvantaged society protecting businesses, protecting their incomes, protecting their jobs. You had people saying to the rioters, no, this isn't acceptable. You had a far stronger adoption of law than I was anticipating, actually, and an embracement of, civil obedience. From people who I didn't expect it. Who would have thought that the taxi drivers would all sort of protect shopping centres? So from that perspective, there are some positives to be taken, but yes, that is a scary event. Does it affect my long-term outlook? Probably not. I think it's crystallized for the government very clearly that the economy needs attention, that unemployment needs attention. Hopefully we see sensible policy from that, but it's not something in isolation that would necessarily derail our perspectives on South Africa.
Thank you, Nolan and Casey. What is the difference between headline inflation and core inflation in relative detail?
All right, I'll grab this one because I know Nolan will pass it to me anyway. So basically, core inflation excludes the more volatile items or categories within your inflation. So that's typically your food and energy prices, and your sort of transport in that as well, just to show you sort of your more baseline that runs through your economy. Headline inflation includes these more volatile categories. So simply, why do we look at core inflation as well as the headline number? If we strip out these more volatile categories, it shows us the sort of the more underlying trends within the economy. And from there onwards, I can sort of pull, is this particular price mover more of a transitory or more longer term, where again your more volatile items tend to sometimes skew the numbers. So that's why we look at both.
Thank you, Casey. The commodity cycle contributed largely to the favorable current account and support to the currency. We note quite a drop in demand mainly from the East for crude oil. How long do you see the benefits of the commodity cycle continue? This is a lovely crystal ball question for you, Casey and Nolan.
Yeah, it's a contentious one, Nolan. I think I'll pass it through to you. Give you a chance.
I get the tougher questions. Okay, so the last commodity cycle lasted 7 years, actually, if you go and look at it. I think this one's shorter. The truth is the East, China specifically, is under economic pressure at the moment. We're seeing, a slowdown that's more significant than people expected. I think part of that's the regulatory reform that they've just done, which has had some sort of blowback on them as well. The thing is that China's response to this is generally to put stimulus into the economy, to stimulate the economy. And you've seen the first signs of this. So they're pushing interest rates lower. They're putting pressure on people to borrow money at lower interest rates. And that's stimulus. The other aspect of stimulus is that China tends to take a big construction machine, go out there, build roads, buildings, cities, and what have you. When that stimulus comes through, that surprise, if you think about it, is probably quite positive for things like iron ore, which is a key, a key metal in much of the construction that China tends to use as stimulus. So potentially, oil price, oil demand less, yes, absolutely. But I think it's not impossible that we see construction metals, copper, iron ore, etc., getting well supported by China. The other part of the commodity boom has been from non-China sources, specifically electric vehicles, certain almost historically byproducts of platinum mines are very useful as catalytic converters and as for use in batteries. And as a result, these, the trends that we're seeing in the economy could actually continue to push for a while as electric vehicles continue to be supported globally. So I don't think that the commodity cycle is going to end tomorrow, but I think that, there are reasons to think it'll continue for at least a reasonable while. But I do think it'll be shorter than the last one.
So final question for today. We've recently seen some improvement in the balance of payments. How much of this is due to simply a strengthening rand? And should we continue to see debt increase, could we see another downgrade of the credit downgrade later in this year?
Casey,
shall I start off and let you sort of carry through on the bank side? All right, I'll just start off with the credit ratings and just provide some more of take a step back and a bit of a backdrop there. At the end of the day, the rating agencies and Moody's in particular, they are extremely data dependent. They rely mostly on the numbers to sort of pull through their decisions. And they, much like the rest of us, are very much in a wait and see moment. I think the real key factor actually at the moment is to see how the medium-term budget speech plays out in November and the reaction sort of from there on out, and to see those debt numbers indeed sort of feed through. That is one of the key elements that you're correct, that the credit rating agencies are monetizing, but they're very much sort of on a wait and see. I believe the sort of factors that we've sort of spoken to in today's presentation will sort of guide a more positive nature towards the rating agencies. They are looking for sort of a stronger fiscal stance, and so far, and obviously if it's still open-ended, this has fed through from there. I think also another element to the question, something more on the rand. Nolan, I'm not sure if you want to take
let me repeat that question. So whether the improved balance of payments is simply an effect of a strengthening rand rather than things improving?
I believe it to be a bit of both, actually, to be honest. It's not just a case of a stronger rand. The factors that we've spoken to before, this increased windfall, a better debt trajectory, the stronger fiscal stance, that has been feeding through onto the balance of payments, albeit slowly but surely. And then, of course, you do sort of have the element of the stronger rand kind of playing through from there. I'm not sure if you want to expand on that.
I think your rand comments are fair. I think it is definitely a bit of both that we're seeing come through. There are definite improvements on the ground. I think there are definite sort of swings in terms of, the world is buying certain commodities right now, and we have a lot of it. I think, we're importing less just because we're consuming less because we can't afford it. And it's all playing out, as such. And then obviously the rand movement impacts us quite a bit as well. Where I do want to comment, though, is just on the rating agencies. And the point I'd make is that the mindset of rating agencies is still negative towards South Africa. They are looking to downgrade. They're looking for reasons potentially to downgrade us. So where we're at is we're probably in the right peer group at current ratings. So, a lot of the downgrades have taken place. And what they would need to see is some further slippage, either weaker fiscal numbers or basically a government budget that just keeps accumulating debt. And I think that potentially would trigger a downgrade. So, the downgrade cycle continues, but I think we're getting to the point where it's going to continue at a far, far slower pace. So I don't think that there are imminent downgrades. I know there are one or two analysts who are calling for a downgrade in November, December. I just don't see it. I think that our debt levels are probably better than we saw a year ago. Certainly the forecasts are better. And as long as we see a continuity of policy, I think that the rating agencies will be quite patient with South Africa as we work our way through the mess we're in.
Well, thank you, everybody. We are very over time. Thank you all of you for giving so freely of your time. And I see that Nolan and Casey, you were riveting because we have largely the same audience that has stayed an extra 10 minutes. Thank you both of you for making yourself available. Thank you, everybody. We will send through the CPD points when we get them, and we look forward to seeing you next month for Essentials. Thank you very much, and goodbye.